Good morning, everyone. It's very nice to welcome you to our fourth results, in fact, our third set of annual results. And as I look out of the room, there's many of you who were there when we started our journey back in, I think it was April 2016. We were in the Intercontinental Hotel in Warsaw. And my goodness, we've come a long way in 4 years. We've gone from 9 shopping centres to 29. We're the largest retail landlord in one of the most dynamic markets in Europe. We've attracted some of the best talent in the industry. We've taken our assets from close to 1 billion to close to 3 billion. And it's been really quite a journey. And we couldn't have done this without, of course, your support. Now, as you know, this will be my last set of annual results as the founding CEO. It became sort of clear that in, say, October, November last year, that I would not be continuing in this role. As you know, I live and work in 2 different countries, and the cost of that to my health and also to my family became quite apparent. But it does give me great pleasure today to introduce you to my successor, Tomek Truslow. So Tomek, maybe you could just stand up. So Tomek, I've known for 20 years. He has been working at JLL for 22 years. He started as the kind of the runner in the capital markets team. He worked his way up to head the capital markets team in Poland, then had capital markets in Central Europe, and then run Poland, and then run Central Europe. And many people have tried to get him to leave his beloved Jones Lang, but EPP was the one that was successful. And I think that caused more of a stir and a news story than anything else. But Tomek brings with him his team were involved with pretty much every single large capital markets transaction in Central Europe. He brings a strength and depth of relationships to the company. And I think just at the moment, this is appropriate for the company. And we've been working with him to integrate him into the business over the last, let's say, 2 months, and he's integrated himself well, and I'll continue to do so for the next 4 months. But I think when people talk about Tomek, they talk about him as being one of the biggest, let's say, most professional people in the market, but also a great man. And we're very lucky to have you as our incoming CEO.
Thank you, Hadley. Good morning, everyone. We'll have hopefully a lot of opportunities to get to know better. I'm starting officially in May. Clearly, I'm getting aware of the matters and I'm getting involved. I want to have as smooth transition as possible. Hadley is very helpful and the management team in Poland is very helpful. I'm looking forward meeting you better, and I'm very happy to be joining EPP soon. Thank you.
Good. Right, let's get into the presentation. So I'll just quickly run through the highlights. Tomek will give an overview of the country, what's happening economically and what's happening, let's say, from a retail perspective. Jacek will then give a financial overview, and then Michał will talk to some of the initiatives that we've been talking with you about for the last, let's say, 4 years, because they've come into play this year. And then finally, we'll discuss the outlook. So just as a recap, I think you're pretty familiar with our portfolio by now, but we have 25 shopping centres of close to 1 million square metres with a footfall of 110 million. And as of June this year, that will rise to 29, and we will have 120 million people coming through our shopping centres each year. So every person in Poland, just to put that in context, will come through our shopping centres 3 times. And this is particularly relevant because 60 to 70% of online sales are click and collect. And what retailers are looking for is your physical presence. So in terms of key strategic objectives, this is our 4th successive year on delivering on our promises. We've delivered our DPS guidance of flat or better than €11.62. We've successfully reduced our LTV down to 50%. We've also opened one of the most promising shopping centres in our portfolio. It's a new 82,000 square metre shopping centre in the north of Młociny. Michał will talk to this later, but we're very excited about the opening of Primark, which will be happening shortly. We've also delivered on our food and beverage strategy. We've been talking over the last 4 years about food is the new fashion. So this year, or 2019, was the year that we upgraded completely 2 of our food courts into food halls, and Michał will talk to that, and we're looking now to roll that out across the portfolio. And we've also successfully diversified our shareholder base with an oversubscribed equity raise in the spring of 2019. So from a highlight perspective, what you can see is that our net property income was up by 4% to 148 million. Our distributable earnings was up by 9% to 106 million. Our dividend per share was increased by 0.2% to €11.62. And we reduced our LTV by just under 2% to 50%. This year was an interesting year because we had 3 Sundays closed, so that was a big difference from 18. So that was an extra 15 Sundays closed. But despite that, we saw an increase in footfall of 1%. This just talks to this middle class that having more and more money that's now coming through and it is spending, which brings on to the next point nicely, which was we saw a 5% increase in sales. Michał and Tomek will talk to that later. But I mean, this is one of the most dynamic retail markets in Europe. Our occupancy is high at 99.2%. There's no structural vacancy in our portfolio. This is just normal turnover of tenants. And our like-for-like NOI growth is at 3.3%. In terms of our office joint venture, we announced in the spring of last year the successful disposal of an office portfolio and a joint venture with Henderson Park. We disposed 3 offices, or 70% of 3 offices, in line with book values. And we retained our in-house property management and asset management, which obviously also enhanced the returns. We remain focused on recycling our office and some of our retail assets. And in fact, what we can tell you is that we are in discussions with Henderson Park in deepening our relationship with our offices. So in terms of Towarowa 22, this was a big year. As you remember, we bought this site in December 2016. We were hoping to build a 100,000-metre shopping centre. This then quickly went up to over 200,000 square metres. The city actually of last week, we may be just under 200,000 square metres, but still it's very, very exciting. This, as you remember, is a 6.5 hectare site right in the city centre of Warsaw, right on the metro line. And it will have a 2-hectare park to deliver some of this experience that people now want in these urban developments. Of course, BIG, as I'm sure you're all aware, announced this at MIPIM last year, and the Mayor of Warsaw also kind of co-announced this, and they're very behind it. The fact is that zoning does take time, and we're working with the city, and we hope this year we'll be making some good progress with the zoning. So now if I could ask Tomek to give us like a market overview. Thank you.
Let me get straight onto it. It's just a couple of slides from my perspective, but also we discussed it with the board. I'll try to address some things that I believe could be interesting for you and very relevant to EPP activities in Poland and plans for the future. So as all of you know, I'm sure this was discussed in this room many times. Poland is one of the biggest economies in Europe. It's 6th at the moment and growing. And on this growth, we reached out to Oxford Economics, so independent economy research house, to look for the next 3 years forecasts. So the traditional EU15 is 1.3 per Oxford Economics. Poland, the 3-year forecast is 2.5%. Of course, we have all been discussing this morning. You're all aware of the outbreak of coronavirus. This is done before that. None of us yet knows how much of an impact it will have. Of course, out of question, it is going to have some impact. I have seen various early stage analysis depending on how it evolves. These numbers are not taking this into consideration. However, the general dynamics stays very valid. Poland forecast going forward continuous GDP growth is on average doubling the Western European EU15 countries. The same continues to be the case for retail sales, retail spending. EU15 average forecast for the following 3 years, so 2020 to 2022, is 1.7%. Poland is 3.3%, doubling the amount. One specific comment I would like to make here. You have probably heard about the positive impact of the increased social transfers done by the Polish government in the last 4 or 5 years. The very important comment is that in these forecasts, the social spending is already transferred into the base. So it's no longer driven by the social transfers. It's driven by the GDP growth. It's driven by the increased salary pace in Poland. It's driven also by the migration to Poland, so new labor coming and starting working in Poland and spending in Poland. So Poland continues to be one of the largest countries in Europe, by far the largest one in Central Europe with 38 million people. But importantly, from a real estate point of view, it's by far the most liquid market. So investors continue to be very interested in doing deals in Poland, and that's across all the sectors. What might be of interest to you, and clearly we're happy we have a solid interest from South African investors in Polish real estate. But the market is very popular with US funds, private equity funds. It's very popular with traditional core European funds, with German pension funds leading the show consistently. But also for the last couple of years, there's significant inflow of money from various countries in Asia. And that includes China, this includes South Korea, this includes Malaysia. There's 1 or 2 funds from the Philippines. It's really a country of interest to global capital. One specific comment on retail. You're all aware of the sentiment in the US and in Western Europe. Poland traded 2 billion euro of retail or shopping centers in 2019. The peak year was 2018 of 2.5 billion euro. 2017, very good year, was 2 billion euros. So 2019 was as good as 2017. The activity continues. And of course, people will look carefully, but Polish retail sector in terms of investment capital continues to be of interest. Few more comments on fundamentals. I mentioned that the forecast on GDP growth are to some extent fueled by the compensation side. This is the slide that shows the so far growth of monthly salaries and the forecast for 2021. It will continue, and this is now coupled with the unemployment. So the bottom line, 2.7%, is the forecast 2020-2021 unemployment. So unemployment continues to be very low in Poland. And I'm mentioning this because this is a heavy driver for the migration to the country. And if you come to Poland, you order an Uber. A year or 2 years ago, you would probably have a Ukrainian driver. Today, you have a lot of people from Asia, for instance, driving Ubers. It is happening. Why it is important? It is important because it increases the spending and increases the GDP growth of the economy. I'm also personally aware that the government is now actively working on various incentives to help migrants moving to country, to have an input, to be able to select who's coming. But they realize now it's very important for Polish economy to be able to make future steps. From company owning shopping centers in the country, it's a very important and very positive trend. Looking at the real estate side, this is another trend that's actually very positive, i.e. future supply of shopping centers in Poland is going to be very restricted. What you see for 2020 and 2021 as a forecast, it's mostly the smaller cities where there's not enough yet, or retail parks. The assumption is there's going to be very little of new future schemes being built. Why is it good? It's good because you can work on existing shopping centers, you can improve them, you can increase the footfall. It's very unlikely that there's going to be future competition from new supply coming to the market. So again, from existing portfolio point of view, this is actually good news. One other comment I wanted to make on this specific slide is Poland doesn't have high streets, and this is a specific comment that drives me to my next slide, which is shopping center stock in Poland per 1,000 inhabitants. My comment here is average Western European number is 279 square meters per 1,000 inhabitants. Poland is 265, so almost in par. But a very important comment to be made here is that Poland does hardly have any high street, whereas most of Western European countries have a very significant element of high street, which is not in these numbers. UK has more than double the amount of shopping centers stock. So the potential or comfort in terms of supply of shopping centers in Poland or potential market saturation, the conclusion out of this is that there is a safe place with still a significant potential to grow, and that's the dots which are the spending power. So Poland is on the growth, as illustrated by the salary numbers, by the migration comments, and when you look at the spending power today versus the Western European countries and the growth forecasts, there's a way to go for Poland in terms of spending growth potential. I would like now to hand over to Jacek Bagiński to dig into the financials. Thank you.
Good morning, everyone. I'm pleased to present you with the annual results for 2019. This year marked the 4th year of delivering of our earnings and 3rd year of hitting our full-year dividend per share guidance. I'd like to provide you with more details on that. Starting from the net operating income, as you can see, operations remain robust. Hadley was mentioning about the footfall increasing in the sales. That actually drove the growth of net operating income comparing to last year by 4.7%, and we hit a number of 148 million euros of net operating income. And that growth was largely driven by the combination of two factors. One was a strong like-for-like rental growth of 3.3%. And this was combined by the acquisitions that we completed during the year. Namely, we acquired the second tranche of Metro assets for 224 million euros, which occurred in June in 2019. That increase of NOI, and this was already mentioned by Hadley, was partially offset by the rental income lost as the result of the disposal of 70% stake in 3 of our office portfolio of office buildings to Henderson Park. 30% of the share retained in our office JV is now included in the joint venture line. We are also very proud in regard to keeping our costs flat. So you can see that despite the scale of operations increasing and top line growing, the administration costs of the business remain on the stable level year on year. As the result of the NOI growth and the cost being under control, EBITDA has increased by 5.4%, and that actually driven to improvement of the EBITDA margin to almost 90%. In regard to interest expenses, they were slightly higher comparing to last year, and this was mainly driven by the acquisitions and the financing of acquisitions, but also higher utilization of our corporate credit facilities. That resulted in the slight increase of our interest expense expressed in percentage from 2.3 to 2.5%. We think that level is stable level and continue in this year. In regard to current taxation, We think that the normalized level of tax would be approximately 10%. You can see that this was about 10% in 2019. We do not expect any significant changes in regard to the tax burden imposed on the company in 2020. In regard to finance income, this results mainly from the participations in development profits on pool of assets developed and owned by ECO SA. As you remember, ECO is one of the largest Polish developer, and at the inception of EPP in 2016, EPP ensured the right to 25% profit from disposal of these office buildings to some third parties. These disposals have been completed over the last 3 years, so we do not expect to see further profits generated by those profit participations in the office buildings. Joint venture line, as I said, it's basically, it includes the profits from our joint venture with Henderson Park, where we keep 30%, but also already includes earnings generated by Galeria Młociny, which we opened in May. As you remember, we have 70% stake in Galeria Młociny, and 30% is controlled by ECO. So it's a joint venture between us. Since this is joint venture, it has to be accounted for as the joint venture, like Henderson Park. Antecedent dividend relates to 90 million euros equity raise that we executed in April last year. This all has led to distributable income increase by 9.6%, and we hit the number of 105.5 million euros, which is 9 million euros greater than last year. Along with the additional share issued, the company delivered the dividend per share of 11.62 eurocents per share. And this is in line with the guidance and marks the third year of hitting our guidance. In regard to balance sheet, as you see, the investment property increased by 5.4%. That main results from the acquisitions that we executed in course on 2019. This, but on the other hand, was offset by disposal of 70% stake in 3 office buildings to Henderson Park during 2019. What is important to mention that we recorded also 1% increase of value of our properties, and this was driven mainly by the NOI increase, with the yields remaining stable comparing to 2018. Investment in JVs reflects of what I already said, which is our shareholding in office JV with Henderson Park, where we have 30%, and JV with ECO with Młociny, where we hold 70% of shares. Banks' borrowings remain stable, and obviously the slight increase results from the acquisition that was financed partially through the debt, but also offset by the disposal of the office buildings that we deconsolidated as the result of the disposal. Net asset value, as you see, increased by 7% on the absolute numbers, and then in case of NAV per share, this was offset by the issuance of shares, which increased its number by 9.4%. More importantly, LTV declined to 50%, And this resulted from the combination of three factors. The first one was the issue of the shares for 90 million euros, disposal of 70% of stake in the three office buildings for 60 million euros equity, and debt amortization. In regard to our liquidity position, the company is well capitalized and has available 100 million euros of undrawn corporate facility. And what you can see on that slide is that since the IPO, the company has demonstrated it can effectively reduce leverage, and the company commits to deleverage it further to 45% or below. Looking at the debt maturity profile, the company has no significant refinancing within the next 2 years, 2020 and 2021. But please note that the large tranche expiring in 2022 and in 2023 consists of several not connected loan facilities used to finance different assets. So there is no concentration. So although these amounts are big, but there is basically, there are different loans, as I said, that we use to finance not related assets. So by the way, these loans are with different banks. So we think there is no significant risk related to refinancing of those loans in 2022 and 2023. In conclusion, the business continues to operate well and is capitalized well as well. I will now hand over to my colleague Michał, who will present you with the operating results of our shopping centers. Thank you.
Thank you. Good morning. So as was said here before, 2019 was a good year for operation. This was the fourth consecutive year with stable portfolio performance. Our footfall was up by 1%, and this is a still good achievement despite the further limitation on the Sunday trading, which I'll elaborate further in that presentation. Sales across the portfolio 5% up. It's a very good number. Moreover, we have on majority of our assets had a positive growth of sales in 2019. Like Hadley said, we do not have any structural vacancies in our portfolio. Our assets are highly evaluated by the tenants. Therefore, occupancy remain high, close to 100%. We are signing the leases with minimum term of 5 years and more. The 4.6 WALT presents our ability to prolong the lease contracts year on year, and also represents the long-term commitment from the tenants to our properties. This all, together with a very great work of all the asset management team, allows to generate growth like for like on net rental income. RTS remains at the healthy level of 10%. Please note we do not include the lower RTS figures from hypermarkets and supermarkets, as do not report, and they're not included in that number. And of course, the Dep Collecting Ratio represents our ability to collect 100% of all the contracted rents. Now, these fantastic figures are, of course, like I said, because of great asset management work of our teams, but also they represent a very healthy retail environment position, which is still attracting a lot of retailers from across the world. This is just to name a few very well-known world brands that enter Poland in the last 2 years. Maybe it's important to mention 12 out of these brands on that board that you see right now, already tenants in our shopping centers. In 2019, we have signed 298 new lease contracts, out of which 90 were new releases. Retail category performance, as I said, we had a positive performance of all retail categories across the portfolio. Just to mention a few: fashion 6% up, household goods 9% up, electronics 7%, F&B including the entertainment 7% up, and we hope to see that figure rise in the next years. This slide shows the performance of the company in terms of sales since the IPO versus the average performance of the Polish shopping centers. data collected by Polish Shopping Center Council. As you can see here, we are, for the last 4 years, significantly outperforming the market, which shows us and proves that the quality of our assets is very high, and our shopping centers are in the top league of the Polish shopping centers. Sunday trading, as you remember, the Polish government introduced a new law back in 2018 limiting the Sundays open for trade. In 2018, only 2 Sundays were open for trade. In 2019, only 1 Sunday. Starting from 2020, all the Sundays will be closed with exceptions of the few days. What we wanted to show you with this slide is that the habits of the customers have shifted. So people didn't stop consuming. Moreover, they simply started to visit the shopping centers more often on other days, particularly Saturdays, Mondays, Tuesdays, and Thursdays. And basically, we have recovered 100% of the potential lost Sunday footfall in the other days. We believe that since in the mind of the Polish customers, Sunday doesn't really anymore is perceived as a trading day, that the further limitation 2020 will not have any further negative impact on the growth of footfall in our projects. Asset highlights, we will start with our brand new open, modern, biggest entertainment shopping center in Warsaw. For some of you who've been on the June tour, you have seen the project right after close of the reopening. The project features excellent connection to the public transportation and also to the metro hub, which is already currently serving 24 million passengers. The highlights of the project is definitely opening of the first Primark store in Poland. Primark is a very successful European fashion retailer who also will open one of the biggest stores in Warsaw, which will definitely have an impact not only for Warsaw but for the bigger region as well. We hope that with Primark, the footfall will significantly increase. Also, we differentiate the project significantly against our competitors. The other highlights is the 2 very successful online platforms selling shoes and fashion. eObuwie and Modivo will open their omni-channel stores. The project features 250 stores, and they're represented by both national and international leading retailers. And just to name a few, the Inditex, TK Maxx, CNA, MediaMarkt, and Mango. And of course, we paid a lot of attention and focus on the retailtainment aspect. And as you remember, the whole second floor is devoted for entertainment, cinema, kids play, dance studio, bowling, and fitness. And of course, accompanied with a very broad offer, both fast food and slow food and in-dine options in that project. We should be able to give you by mid of this year more comparable data in terms of the footfall and the turnover. Let's move on to Wrocław. This is a shopping center called Pasaż Grunwaldzki. As you remember, back in 2016, we have set up a long-term asset management plan to reposition that center in a quite competitive market and also to strengthen its position against the upcoming competition from Unibail, which opened in 2017. During that time, we have secured all the anchor tenants and repositioned them within the shopping center. We have also prolonged 40 leases. And since that time, 2019, we have signed 25 new tenants into the project. Last year, we have signed 7 new leases, prolonged 18 leases. There was a lot of work on the asset management side, strengthen the tenant mix, getting the best tenants inside. We have also do the transformation of the food court into a very modern, vibrant, urban food hall, which I'll talk in this presentation later. We have also done a lot of upgrades in the common areas, given the project a modern and fresh look. And all this led to very good figures in the performance of individual categories. Fashion up by 7%, food up by 21%. This is because together with the supermarket operator, we've helped them to completely refurbish their store, and this is the effect of it. Health and beauty up by 5%, and F&B, fantastic figure, up by 16%, and we'll talk about the F&B figure in a moment. Excuse me, I just wanted to come back to the figures. And as you can see here, the outcome is that not only we have regained whatever we have lost because of the opening of Unibail scheme, but also we are still showing that we can still dominate in the project. And the sales are up by 7%, footfall about 4%. These are really outstanding figures. The annual footfall is way above 100%, and the occupancy is close to 100%. Galaxy, as some of you have seen that project, it had, after the successful extension back in 2017. This project with currently right now 56,000 square meter is the biggest and the most dominant retail scheme in the northern western part of Poland, with its catchment area extending over back to Germany. Last year we have all been very active in the asset management work. We have signed 11 new leases, like Desigual or Xiaomi, who did their first entry into Szczecin, opening their first store in our shopping center. We've been also very successful prolonging 21 stores. You can see here occupancy remains 100%. We have literally no empty space in the project. Top performing categories: fashion 7%, household 25%, F&B 12%, and electronics 15%. Of course, the biggest highlight of Galaxy is the opening of a new brand called Foodport, which is another, like in Wrocław, transformation of the food court, and I'll have a more broader materials on that in a second. F&B. So as you know, we've been talking to you, and I personally as well, and Hadley, during the tours and the previous presentations, how important that is. In this part of my presentation, I would like to highlight some of the interesting facts and features that support our thesis: food is the new fashion, and how we turn that fashion into our advantage. But before we jump in this, I would like to share with you a few of the interesting stats that was provided to us by Jones Lang LaSalle. So in shopping centers that has a very interesting and broad F&B offer, there's about 55% more transactions. The F&B shoppers spend on average 50% more than the others, and the F&B users are spending 35% more time in shopping centers than the other customers. And this one is interesting. 40% of the customers base their choice of the shopping center to visit primarily on the dining options and the F&B offer, which is in the shopping center. Now, those two last figures are a special interest, my personal interest, because EPP has only one major commitment towards our clients, which are the tenants, is to attract as many customers into the shopping centers and, of course, make them stay as long as we can. Now, you might say restaurants, cafes, and bars were here for years, so all of a sudden this F&B is becoming a new fashion. Well, because the more we spend, the more we want to experience, and experience. And if you look at this interesting statistic, 67% of millennials in Western Europe say they would rather spend on experience than on owning things. Therefore, F&B Europe and Poland is also becoming a very important part of the lifestyle. And of course, the more we earn, the more we enjoy eating out experience. And the most important element is that demand for experience drives the footfall. So you might say, so what's wrong with the current food courts? Why do we have to do this big transformation into food halls? Well, personally for me, the food courts are boring. They're outdated. They do not deliver the experience that the F&B is looking for. They remind me rather a canteen or a place where people like to come in, spend time with their friends, and or simply to relax. Therefore, a lot of very old, cool, and new restaurant concept, cafe and bars are opening up on the streets, food markets, and food halls, because then again, they're looking for this ambience next to location to deliver the experience. So if you put those three ingredients together, which is a very wide range of food offer, ambience, and a good location, that's a fantastic recipe for destination. Therefore, we decided to act and decided to turn that F&B experience into our shopping centers, because we strongly believe that the F&B can create another destination pillar in our shopping centers. Therefore, we have created two new brands, Food Station in Wrocław and Foodport in Galaxy, and we've done a massive transformation. We see that the initial figures of both the footfall and turnover, especially in Wrocław, are working in our favor, and there's more people coming in, they're spending more time in our shopping centers. It also gives us a fantastic opportunity and flexibility, because we are seeing right now interest of slow food restaurants that were not interested before to entering a shopping center with their standard typical food court. It also gives us the ability to transform the bad performing GLA retail space into the F&B space. So let me start with Pasaż Grunwaldzki. Some of you who've been on a tour in June, you have seen the transformation that was done there. On the number side, we have increased the sitting area up to 1,000, which is a very important element, and to allow the restaurant to fully use the opportunity for having the people and the footfall coming to the shopping centers. The sales in the shopping center in the 7 months since opening of the food court were up by 7.5%. But I think what is most important is just at the food court sales, they were up by 13% right after the opening and implementing of that new concept that we have here. Now we have a little movie prepared for you, and I think the movie will speak for itself. This shows you the food court before and after our transformation. You can see how much work was done into aesthetics, more sitting area. We've played a lot with the colors to give it a more urban, vibrant look, something different than a typical food court before. We have also implemented different sections for the kids, for teenagers, and also for the students who come in there during the daytime. A lot of the empty space that was never used now has its own spirit, and there's a lot of people coming in and filling up the entire space. We have a special library, places where you can sit down, charge your phone, and just simply sit down and relax, a proper true destinations. And we are seeing a lot of positive comments both from our tenants as well as from our customers. Now, Galaxy, we have just finished exactly the same transformation. I think we have also learned a lot from the Wrocław transformation. We've opened, beginning of January, a new brand as we call the Food Court. So in numbers, we have increased, and again, the sitting area, which is also very important. We have completely changed all the seating, and the ambience has changed very positively. Moreover, we have converted 750 square meters of the retail GLA into the F&B GLA. Therefore, we've been able to introduce 5 new restaurants, all of them new to the Szczecin market, giving us a total of 17 dining options in that project. Please remember, we still have in that project very big bowling and cinema in Szczecin, creating a very massive F&B and entertainment offer. So this is how this came up, and I'm very excited to see the impact of the numbers of that project in Szczecin. Very similar to Wrocław, we have also divided the area, like I said, for the young audience, for the families, for the kids. We have also built in a basketball court inside the shopping center for kids to have fun and to relax. We have also opened up the mezzanines in Papa Diego and in Pizza Hut, allowing the people to sit on the first floor, see here to the right, and just enjoy it like you'll be sitting somewhere in the street. Now we do not have, as you know, as this is as a new opening, we do not have any data on the growth of footfall. Of course, we're getting a lot of positive feedback from the customers and from the tenants. But what is interesting is right after we have opened the new food court to the public, we have seen that all of the restaurants remain open on Friday and Saturday up to midnight, because the people who are leaving cinema and bowling still want to eat and just simply experience. So thank you very much.
Look, just before we go on to the outlook, I would just like to acknowledge the hard work that both Michał and Wojtek and their teams have done on this. Now, a lot of people talk about food as the new fashion. A lot of people talk about how they're repositioning the centres. But we've done it. And this is not expensive. The cost of these to refurbish it with true old-fashioned Polish value engineering, it's about €1 million per centre. So we've completely changed the dynamics of these two really well-performing shopping centres into now something that is fresh and alive and is now winning market share away from competing centres. So it's not just on the financials we deliver on our promises, it's also on the promises we make on what we're going to do within our shopping centres. This is not a game for us. We want to win that footfall battle. And I'm very, very proud of what Michał and Wojtek and the teams back home have done on this. It's quite extraordinary. But of course I'm slightly biased. Okay, let's go on to the outlook. So what can you expect for 2020? Well, we're going to continue to look at our capital structure. We're going to continue to try and drive down our LTV just like we did in 2019. We, of course, had 4 shopping centres that we integrated, or 5 shopping centres we integrated last year, and we've got another 4 we've got to integrate this year. This is not easy. We have a dedicated team of 12 people who work full-time on bringing these shopping centres into our systems and into the ethos of how we manage. We will continue to recycle our assets. We still have another 3 office buildings, and we will continue to look to seek to get book value for these assets. And of course, the asset management is very much at the heart of our business. I mean, what we're doing is we're really building value of our shopping centres by changing it, and you can see that. What we will continue to do is actually, from a management perspective, what you can see in some of these smaller cities where there's actually less restaurants. If you transform food courts into food halls, we actually think it'll be actually more effective in some of the smaller cities. So we're going to be rolling out that thesis this year and developing plans. However, as you know, Poland is at the start of a coronavirus outbreak. I think there are 50 cases in Poland at the moment. The government has taken quite quick action on this. But as of Monday, all schools will be shut for 2 weeks. It's also gatherings of over 1,000 people will be banned for 2 weeks, and also cinemas have been banned for 2 weeks. So the board has decided it would be irresponsible to issue guidance until we can assess the impact on the business. That said, what you can see is the fundamentals of this business are very strong. The market it's operating, the way the middle class that's emerging and coming through, and you can see that in the footfall and the sales numbers. But to conclude, and forgive me if I read this directly, as soon as the board determines that the situation has stabilized, they will give guidance. As you can imagine, this was part of a lengthy discussion at the last board meeting. And the feeling amongst the board is that whilst we see some short-term fluctuations, the fundamentals remain strong and EPP will continue to grow its NOI. Okay. So perhaps on more of a lighter note, I'd like to thank you all for the journey that we've been on with EPP together. And also I would like to thank all of our, because I don't know whether you know, literally 3/4 of the company are listening to us back in Poland. I'd like to thank you all for the support, and really what I respect about what we've done in EPP is that you guys are just smarter and faster than the competition, and I really just want to say thank you. And finally, to the management team, to Jacek, to Wojtek, to Michał and Rafał, it's rare that a team have gelled as quickly as we did, and I'm very proud of the achievements we have. And I know that we leave it in incredibly safe hands with Tomek Truslow, and I wish you all the best. And I will continue to be a shareholder for this company for many, many years to come. Thank you.
Thanks, Andy.
Thank you.
So we now have time for questions. As I believe is tradition on the Johannesburg Stock Exchange, is all the difficult questions go to the incoming CEO. Do we have any questions?
Last night, Italy announced closure of all shops other than supermarkets. They announced the closure of all shops other than supermarkets and pharmacies for 2 weeks or whatever it is. It would appear that the Polish government, to some extent, is looking very closely at Italy and possible chance of that being implemented. But I also understand, and I don't know if you heard, that the Polish government have said they will be putting in a package to assist shops. Have you heard anything in that regard?
Yeah, it was announced, there was an announcement last night that there is going to be financial aid given to businesses affected by the coronavirus outbreak. But still the details are still being worked out, but I know that the team are looking at it.
We just have seen the government reaction to Italy and to what you said. They decided that all the stores will remain open. The only thing is the big gatherings, like Hadley said, in the cinemas. So that's the latest. That's the latest, that the shops are not being planned to be closed down.
And also, we're clearly looking at it very, very closely. And the Polish government has decided to take very significant precautions, and with closing of the schools, etc. And this was made at the time when the total number of confirmed cases was like 30. And initial action was, isn't it going too far? But we have looked at it, and probably, given what has happened in Italy and what is happening in a couple of other countries, then perhaps it will be positive to make big steps that may seem as maybe too big, but we're all hopeful that these big steps will bring the situation under control as soon as possible and allow us all to come back to regular business. So we're supportive, because hopefully this will allow the situation to be controlled as soon as practically possible. And you also mentioned the potential financial support. The government has not yet released it, but they have released an information that they are debating where and how to do that. And we're expecting a significant supporting tools to be offered by the government, and that's very likely to be announced soon. Which is also good news that the government actually is reactive and is thinking of this from very early on.
Of course, what this does mean is that it's very likely we will certainly be postponing the June investor tour and maybe even cancelling it for this year. We need to keep you guys healthy and safe too.
Okay. So we had 2 questions from the web, right? So the first question is, this was asked by Daniel King of Avior, and the question is, if you are unsure about the impact of coronavirus on your balance sheet, is it not more prudent to skip dividend payments until the situation stabilizes? So basically, obviously, we do not plan to skip that dividend payment that we intend to execute in April this year.
Yeah, I think it's, we acknowledge that this is very topical at the moment, but this was discussed at the board, and the intention is to maintain the current, let's say, payout ratio.
But this is, I understand, this is for the 2019 dividend, right?
Yes. Yeah. Yeah, but I think Daniel was asking in general about the dividend payments in the one that is due in April, and those dividends that will be paid in 2020 for 2020, right? So for now, we don't have any plans to basically to reduce dividends or to not to pay these dividends.
I may add to that as well, because it's part of the overall decision not to provide guidance yet.
Yeah.
The situation is very dynamic. We all hope it's getting to be controlled as soon as possible. But when we were on our way here only 2 days ago, the situation was different from where it is today. And we're now debating whether we should wait until our planned return date, which is on Thursday next week, or we should maybe reschedule to get earlier. And that's not because we believe there's particularly bigger issue for us personally, but we think there's much bigger issue of how the travel is going to look like over the next 2 or 3 weeks, and maybe a quarantine. And clearly the last thing we want is the kind of big chunk of the management board of the company to be stuck in a quarantine somewhere on the way. So we'll be debating this afternoon. And I'm saying this because it's really impossible for us today to make a judgment. We'll be all acting or working very hard over the next week to 2 weeks to try and assess the impacts. We'll be running various scenarios. We hope things will come back to normal as soon as possible. But today it's too early to say, too early to take decisions. We clearly need to be very cautious, and we need to look at all these things. There's going to be a lot of work with the employees, of course, in the shopping centers. How do we manage them? Some people will prefer to stay home for a certain period of time, which is normal, and we need to be accommodating this. So there's a lot of very proactive actions that all of us will need to be made, and part of that is to analyze the overall situation and the impact. And we'll advise on this as soon as we come to conclusions.
Okay, and the second question from Daniel is, what has been the tenant sales growth performance of the M1 portfolio relative to the rest of your retail portfolio?
So the footfall on the M1 portfolio was up by 2.7%. And the figures that I have now had in terms of sales, all the shopping center had a positive growth from 0.5 to 1.5%. Only one project in Poznań had a negative sales growth. So that dynamic not as big as our other properties, but still a positive growth.
Also, maybe a final comment on the first question. The team is fully proactive already, so there's certain policies and procedures implemented in the shopping centers. The tenants have been advised, the general public has been advised. Clearly, it's sanitary actions, but increased actions in terms of control. So the team is doing all the necessary actions proactively. This is not done today. It has been already done a number of days ago to try and make sure we create enough comfort for the clients of the shopping centers to continue visiting. The situation is dynamic, but we're acting proactively.
Well, we obviously have a plan in place for fluctuations, for other eventualities, which are obviously the outcomes are quite similar to this. But I mean, the coronavirus plan we put in place 2 weeks ago, just to let you know.
Yeah.
Well, good. I think that's it. If we are going to go into quarantine, I'm very happy to get into quarantine in Hermanus. But I don't think my wife would be very pleased. Thank you all again, and look forward to answering a few more questions outside.
Thank you.
Thank you.
Thank you.